But if you look at what was so different about Donald Trump's tax cuts, even from previous Republican tax cut plans, is that a lot of those resources went to giving more take-home pay to middle class and working class Americans. It was passed in 2017, and you saw an American economic boom unlike we've seen in a generation in this country. That is a record that I'm proud to run on.
Wow. Just clear as a bell. Joining us now, John Carney, Breitbart Finance and Economics editor and co-author of the Breitbart Business Digest. Daily basis, you got to get it, folks. And my pal E.J. Antoni, research fellow at the Heritage Foundation. E.J., I just want to start with you and dispense with this issue because Senator was correct, okay? He was absolutely right. The corporate tax cut, which was not what Republicans had usually been doing, had the biggest impact, the biggest increase in after-tax income in the middle and lower quintiles. And you have, I mean, we can go through this. Let's see, tax cut of 16% to 26% in the bottom quintile. You had tax cuts of 11 to 13% in the middle. In the top quintile, the very top quintile, if you made over $1 million, you picked up only 6%. Now, these are growth rates. These are increases, what really matters. And he was exactly right. But the Democrats continue to lie about the impact of this.
And Larry, I think you have to wonder, why is that? Why are they pushing so hard to end or really repeal the Trump tax reform? I think a big part of that has to do with their donor base. If you're a high-income earner in a deep blue state like New York, New Jersey, Illinois, California, you actually paid more after the Trump tax reform, not less. And so repealing that, yes, it would cause taxes to go up on middle America, but probably more importantly for these folks, their primary donors would actually see a decrease in their federal tax liability.
Yes, it's like, I guess if you say something often enough, somebody's going to believe it. They have been lying about this, well, ever since the 2017 tax cut went through, basically. This and the fact that it caused a huge, I don't know what Walt said last night, it caused an $8 trillion budget deficit. This is simply not true. The revenues rose. We had Laffer on, it was yesterday or the day before. They lie about who made out the best. It's the middle and lower incomes that made out the best. They lie about the revenue impact, and they just lie about the whole thing because all they want to do is raise taxes. Don't people see through this? That's what I'm asking.
I think they do see through it. They were lying about it when even before it passed, when it was still working its way through Capitol Hill. They were saying, "Oh, it's just going to cut taxes for the rich."
Right.
I covered it every single day, and I, you could go back through the archives of Breitbart News and find where we point out it actually does. Almost everybody who pays taxes got a tax cut from that.
Oh, that's exactly right, by the way. And people like the left of center, the Brookings Institute, the Wharton Penn model, and so forth, have said that. EJ, I guess Democrats oppose all broad-based tax cuts. They want to have tax credits, which is spending through the tax code. It's all they are, targeted tax credits to their favorite political group. They don't want the whole country to enjoy the prosperity that would come from a broad base across the JFK type or Reagan type or Trump. They always oppose that. They always oppose. Kennedy was the last real Democrat who had a broad-based tax cut, right, in 1962, and it was finally passed in the Senate after he was assassinated.
And Larry, I think the reason for that is because it allows them to essentially, again, going back to the donor base, it allows them to extract more political contributions out of the economy. Because if you're going to have these high rates and these very narrow, limited deductions, then people are going to be willing to pay an awful lot to a politician in political contributions in order to get a carve out for themselves and not for their competition.
You know, well, I used to know Democrats who wanted to lower capital gains tax, but they've all been retired. John Carney, the makings of a second Trump economic and financial boom from your Business Digest. What is this out? This is out today.
Yes. So
what's thinking?
So last time, Trump was a surprise win. And if you looked at the surveys, particularly of business leaders, they didn't think Trump was going to win. That's repeating itself again. So what that does, it actually sets up markets and the economy for a surprise upside, because those same CFOs that say they don't think Trump's going to win, they think Harris is going to win, say Trump is better for the economy. So what that tells you is they're expecting a worse economy after the election because they think the worst candidate is going to win.
You know, that's like 2016.
It is. That's exactly what happened.
I remember the election night.
Yes.
At first, the market went way down. And then as it became clear that Hillary was running out of real estate and Trump was going to win, you had this incredible soaring market. I remember that.
And not just markets, consumer sentiment. People felt better about the economy. You had a huge jump in consumer sentiment, and it wasn't just a jump. It wasn't a spike. It rose, and then it stayed high for the entirety of the Trump years until we got hit by the pandemic. And we've been depressed for a long time with consumer sentiment. I think we're setting up again for another jump in consumer sentiment, jump in the stock markets, and an investment boom from companies when they see that they're going to get a tax cut, that their taxes aren't going to rise. They're all holding back right now. The Fed did a study, showed 1/3 of CFOs are saying they are holding back on investment because they're worried about the tax environment.
EJ, I know the dock worker strike is very unpopular. And I do think their 77% increased demand for 6 years is too much. But I want to say, just give me 30 seconds or 40 seconds. They were clobbered by the high inflation where prices rose faster than wages for the past 3.5+ years. They were the same thing everybody else did. A lot of these strikes now are kinds of Boeing strike, there's some other strikes, because they were clobbered by the Biden-Harris inflation, which was much higher than wages, and they want some remuneration from that. And I think 77% increase might be too high, sure. But I think they got a point. That's all I'm saying. Last point here.
And I think that's why we have seen so much labor unrest in this country during the Biden-Harris administration. I actually wrote a piece for Fox back in October of 2021 citing all of the reckless runaway spending that this administration was putting in place and saying, look, we're going to have inflation and that's going to lead to labor unrest and we're going to have strikes. And here we are.
Last time we saw all these strikes,
1977, the longshoremen strike, that was a high inflation period. Inflation causes labor unrest.
And there was a whole bunch of strikes at the same time. Inflation causes inflation causes labor unrest. It causes consumer unrest. It kills confidence. I got to get
these guys actually got a pay cut because of inflation. They had negotiated a 2 or 3% raise a year. They're really, even the 77% over 6 years is really mostly making up for the pay cut they got because of Biden inflation.
All right. Thank you, John Carney, EJ Antoni. We appreciate it very, very much.